Hi traders and welcome to Pepperstone's Technical Analysis Market Wrap on Friday the 11th of September. So I've seen some really good moves in the market this week. The S&P's been running up and down 2 and 3% each night, which has been a really good instigator for some of the majors to start moving in some really good direction. So we'll jump straight in and have a look at the charts and see if we can identify any trades for today and early into next week. So we'll start out here on the daily Aussie USD. So you can see we've had a big bullish engulfing candle set up here. It had a decent crack to try and get up, but it has pulled back throughout the trading period in the US and pulled back to the 20 moving average, which is where it's pretty much trading right now. A pretty negative candle, but it is in line with what the S&P 500 has been doing, and we know this one has been tracking it quite a bit. So we need to go to a smaller time frame to probably identify any potential opportunities here. It is sitting on the 20 now, and coming towards the end of the US session, it's probably going to be a little bit grounded. So I think if we're going to be trading this one throughout the day, we're probably going to be focusing on the 20 moving average and potentially longing it into the previous highs of the bullish engulfing candle. I don't know if we'd be wanting to short it if we don't get a close below the 20 in the next sort of 15 to 20 minutes or so, which is probably not really looking likely. So I think we need to scalp this one, continue to play the zones. We need to go to a smaller time frame to actually do that. So you can see here we're hovering around that 72.50 area, which is pretty standard. I mean, it does move in 50 pip increments, this one. So if you are going to do anything, we're probably aiming either for the 73 cent mark, so maybe a bounce off the 20 on the daily to get it to the 73 cents. Okay, so around this level here, and maybe if it does break the 20, yeah, push it down to the 71.50. So yeah, I wouldn't be, or even the 72, just depending on how fast it's moving, but probably aiming for no more than 50 cent or 50 pip increments on the Aussie USD for today's trading, and then look for a bit of a pattern breakout on Monday to see if we can establish a trend. But for now, just trade it in the 50 pip zones, take the smaller time frame changes of trend, and either aim in the first instance for around 73 cents for a bounce off the 20, or a break off the 20 on the daily and aim for the 72 cent flat. All right, we'll move on to the US dollar CAD. This one has shown a little bit more strength in recent time. It's continued on its good work from last week. We were talking about the double bottom there. It did continue on. It's broken above the moving averages here. You can see that. This is on a 1 hour chart. It's been a pretty good 1 hour chart trading over the last session. We'll go to a bigger time frame so you can see a little bit more of the move. It's desperately trying to get above the 20 moving average on the daily, which we were waiting for. It did break above it this week, and then it came down, tested the bottom, and you can see here it's trying to fight its way above it. We do really want to see a close of this daily above the 20 moving average. Okay, very important for the US dollar CAD. It'll be relevant to the index, which we'll check out shortly, but we would definitely want to see a close above this 20 and continue on its good work. The 1 hour again is showing some good strength. We've got a bit of a break above the moving averages here, trying to push above the Bollinger Band. We can go to the 4 hour as well. You can see that we've got our series of higher highs and higher lows, but if we get above this level here, this was our first target, so it hit that earlier in the week, but it does need to get above this sort of 32.55 area, close above there, and that'll open up the US dollar CAD for a pretty reasonable move up. The dollar index strength is indicating that. You can see the stochastics has got plenty of room to move as well. So keep an eye on this one. The most important thing is that we get that close above the 20 moving average, and then just aim for these. In the first instance, aim for these highs if you're going to scalp it, but it does need to break above these levels here before we start to get excited about this one and push it to the 200. So it's got a bit of work to do to get that sort of movement, but we've got MACD telling us that it certainly can, and the stochastics is telling us that it can as well. So we'll keep an eye on that one. So we'll move on to the US dollar Swissy now. This has been an interesting one because it's been threatening to break out. I'll take it to a 4 hour and show you what I mean. It certainly gave us the lightning bolt effect that we're looking for. Sold off, probably a little bit deeper than we would have liked for a trade that should have been maintaining its strength. But when we go to the daily, it's telling a pretty compelling story about the pullback. So you can see here we had that break above the 20, which we wanted to do. It went up, almost touched the 50, which is, it's going to find some sort of resistance there, like you would expect, seeing as though it hasn't been touched in so long. But it came back. I would have liked it to have probably stayed closer to the 20 moving average. But what it has done, it sold right off and then has been completely pulled back. So if we blow it up a little bit, you'll see what I'm talking about. What's going to basically occur here unless something crazy happens in the next couple of hours, is we're going to get a very strong hammer candle. And although, you know, it doesn't appear to be at an area of support, what it is doing, it's pulling straight into the 20 moving average. So, you know, that's a really, really strong sign for it, which is really good. You can see the MACD is still rising on the daily chart. Okay, so, and the stochastic could turn around, you know, in the blink of an eye, really. So this has been a really, really positive sign for it. I really like this. That it's been able to pull it. Didn't like that it went so far, but I do like that it's pulled itself nearly all the way back. So keep an eye on this one's trading. If it closes here and starts to show signs of, we'll go probably to a 1 hour. What we need to see here is a series of higher highs and higher lows, and I'd wait for it now. Like, this is one of those ones where it can move and move fairly significantly in a positive direction. So what we want to see here is a bit of a pullback, get the series of higher highs and higher lows, the lightning bolt that we're always looking for. And if we get that, that'll mean that it's above the 20 moving average on the daily, which is a big deal, especially after that rejection. And we've got MACD, you know, plenty of power there. Stochastic is pushed up. So, yeah, not a bad trade to keep an eye on this one. We desperately want to see. Okay, we've got a good reversal pattern here happening on the 4 hour. So 2 positive candles that are looking pretty good for this session. All right, so what we want to see is get this hammer closed somewhere reasonably close to where it is now. Price above this 91.20 area. Short-term change of trend on the 1 hour. So all that's going to take is a lightning bolt. And this could easily see us move up to the most recent highs and potentially up past the 50 and start pushing into the newer levels at around that 93, 50 to 80 zone, which is a pretty good target for this particular pair. All right, we'll move on to the dollar index now, because this has been one that is driving, obviously, those US dollar pairs to some extent. We've been talking about it for a while. That it has shown the strength that we've been looking for. It did get the close above the 20, which I've been harping on about for about 3 weeks, so it finally did it. Pulled back a little bit, and it did the same sort of pattern to the Swissy. Here it did try and break down past the 20 moving average, but you can see the price has been completely pulled back, and this one has closed above it. So this is a really good hammer rejection off that zone. So the 20 has done its job. It's pulled it up and starting to show some real strength now. So again, MACD is still on the rise. Yeah, this has got a lot of potential to start moving up, this one. So if the dollar index does what it needs to do, the US dollar CAD and the US dollar Swissy will certainly follow. So, you know, you can trade this one in isolation, of course, and just trade it individually, which is a good enough trade. And what you want to be looking for is the one that's presenting the best opportunity. So, you know, with this one, what we want now is, you know, a close above this level here. And if it does that, it's going to go basically to the first support zone that was support over here, which will now provide some sort of resistance, and that's around the 94.50. Okay, so that's our first target. But I'm expecting bigger things from this. Like, you know, I wouldn't expect that it's going to just stop there. It's probably going to find a little bit of resistance there, so you might want to take your first little bit of profit there. But if you missed the initial burst, wait for a break of this level, and then, yeah, we'll be pushing it all the way up into the 96s. So this has certainly got the scope to do that. It's got the momentum and the indicators telling us that it certainly can. So the first signs of the breakup have happened, so this is really good. This is our first target. You know, we want to be looking for that 94.50 area in the first instance, and then a break of that, and then push it up to here. So they are separate trades. I'd be taking profit at this level in the first instance. All right, we'll move on to the EURUSD now. This has been basically done the opposite of the dollar index, as we would expect. It's seen a fair bit of weakness over the last week of trading here. This is the daily chart. You can see that it pushed below the 20 moving average, which is not a very good sign of it. Yeah, the opposite of what the dollar index has done. Had a decent crack, just like the index did. Went up all the way to the 19, still playing these bands. They've been fantastic for trading, for scalping opportunities, basically trading into the 119s, the 118s, and the 117s have provided really good trading opportunities. It's a very solid band, every 100 pips on this one, but it's been a big rejection and prices closed underneath the 20. So this is telling us the exact opposite of what the dollar index has done. The bulls have lost that mini battle here throughout these two sessions, the London and the New York in particular, and they've been managed to all the way down to the 20. Now it hasn't closed there yet. Still got a little bit of work to do because it's, you know, New York's almost closed, but if it does happen to close around this level here, you'd be looking probably for the continuation down to the 117. So, you know, look for the smaller changes of trend. I'd be looking, I mean, obviously they're going to be down anyway, so you can see that on the Euro 1 hour, what I'd be looking for is maybe a little mini pullback here. Look for the lightning bolt effect on the way down and aim for that 117 area. If it does go the other way and find some strength throughout the day and breaks up above the 20 moving average on the daily, the first target's going to be the 119. Okay, so look, they're sort of 40 to 80 pip scalps on this one, a little similar to the Aussie. You're not going for anything too extravagant because really you have to wait for the change of trend to happen. And by the time that happens, you're going to give away some pips. There's no question about that. But at least you're getting confirmation that the direction or the short-term direction has changed and it is heading towards the key pointers that you're looking for, which is the 119 and the 117. So better to give away a little bit of pips at the start and get the confirmation that you're looking for, and then you can trade it with a little bit more confidence. So aim for the 117s in the first instance, because that's what it's looking like at the moment on a change of trend on the 1 hour. And if that doesn't happen and it closes above the 20 and starts to edge up, take a trade into the 119, and it should be able to play that game, hopefully throughout the trading session today and into New York tonight. So the next one we'll have a look at is the pound USD. We're going to look at the majors today because they're the ones that are really playing the moving game, which is good. It's what we want. We want big moves. Okay, this all started at this is the daily chart. It all started at the shooting star that we saw here a little while ago. It's continued on. The selling pressure has been very, very heavy. Look, we know we've had Brexit news. We've had all sorts of things that have pushed this and driven this. But in saying that, it is moving a little bit more aggressively than the euro, obviously, but in the same direction. The dollar strength is obviously hurting this one, just like it's hurting the euro. So no surprises, but the moves have been good and they've been exaggerated. Okay, so we find itself here at sort of that 127.90, 128 level. Clearly a pretty strong level of support here. Okay, you can see we had support over here. We've had resistance over here. We fully expect that it's going to find a reasonable amount of support here. It's got the 200 moving average on the daily, which is a big deal. Okay, it's got a little bit more to get there. Like that 200 is sitting at around that 127 sort of 30 area. It could certainly continue to push down into there. MACD is looking pretty weak. It's an interesting one, this one, because realistically, it's got a fair bit of work to do before it breaks this level, okay? It's got resistance everywhere. It's got support everywhere. So this is a very, very strong level for it. This sort of this 128 to 127.50 zone is a very, very strong zone. So what I'd be looking for is, for the market to be pulling up here. If you're going to short it, you're not going to get much of a go at it. It's going to be a pretty reasonably small scalp, maybe 20 to 50 pips. I wouldn't be trying to short it any further than the 127.50 probably in the first instance. Down to the 200, I wouldn't be trying to go past that. So maybe 127.35 to 40 would be as long as you'll go, which is around 50 pips. That's going to take, that's the easy trade. That's what looks fairly easy at the moment, but there is a bit of traffic here. You can see there that, there was a fair bit of congestion in these areas. Remember, this is a daily chart, so there's going to be a little bit of trouble getting there. It's not going to be a straightforward move. What you're looking for, if you want to long it now into the moving averages back up, so I'm not saying it's going to go all the way up here again, but in the first move, it might actually retrace a little bit, which is pretty expected for after such a big sell-off. You're needing a reasonable change of trend around here, okay? And when I say reasonable, I'm sort of talking about probably a 4 hour, because when it's free falling like that, you do need a significant time frame change of trend to actually make it or give you the confidence that it's actually going to turn around and that support's going to hold. And by that I mean we need a series of higher highs and higher lows, okay? At the very, very least on the 1 hour. So if we take it to the 1 hour, you want to see that series of higher highs and higher lows. But probably more than likely the 4 hours is the one I'd be looking for. This is going to be one of those ones where it's going to be probably a little bit of a tough trade until it actually gives you the signs that we're looking for. So what we want to see, I'll give you, let's have a look. So you want to see the series of higher highs and higher lows, and then we'll be confident that this level is going to hold on the daily. So a really, really important level. If it does that though, and we get the series of higher highs and higher lows that we want at a very strong level of support, the obvious targets are back at around that 130. So it's certainly got the room to move. And we say, well, you're giving away quite a few pips for waiting for that reversal, but you have got a fairly significant move and take profit area before this finds real resistance again. So there's a good couple of hundred pips there to be able to target if we get the reverse that we want. But it's very, very important that we wait for the change of trend. Otherwise, this could certainly continue lower or hover around this area with no significant momentum in either direction. So the last one we'll have a look at is the US 500. I know it interests everybody. Been a very, very big week. You can see here that the candles are big and long. They've basically done the opposite each day. So we've had big drops and a reasonable gain. Last night's session, it's about to close. It's been basically given away everything that it picked up yesterday. Look, no surprise in September that we see this. So we're certainly not surprised here. This is one of those ones that's still a little bit difficult to trade, mainly because it's not quite at an area where you would say it's very strong support or resistance. If you're going to target a short on this one, you're going to be aiming for this probably 32.30 area. We can see the horizontal line. That's a very strong area of what was support there and resistance right through there. It's going to be the place that is going to catch it if it does continue to fall. It's still, that's still 100 points away, so it's still a reasonable trade. What we'd be looking for now, though, because we're getting a fair bit of volatility up and down, we want to see a break of this level. So we need to see a close below the previous low here, so a close below that 32 sort of 90 area, and then you're going to basically aim for that 50 points. Doesn't sound very exciting, but it is a scalp opportunity, right? At this moment, you don't want to be looking for long-term changes of trend. You don't want to be looking for all-time highs or really big breakdowns of lows until it actually proves it. And until it does break down past the 32.40, I wouldn't be looking at shorting this for any significant amount of time. So this is an absolute scalp at the moment. So aim for the key zones. That's always the best way to go. If it does break above instead, you want to be taking the break above the 34.25 there, and then aiming for the previous highs. So all about the scalping on the S&P 500 until we get some significant movement in one direction to show us that it's going to start trending again in a good fashion. But there is some good scalping opportunity. When the volatility is here, the scalping opportunities are there as well. So certainly don't ignore it, but wait for the signs and aim for the key levels. So you've got your 32.30 and your 35, call it 90 area. If you're going long. But at the moment, it's looking a little bit shaky for the long, and I think I'd probably be aiming for the 32.30 on a break of a low here on a daily chart. So I hope everybody's had a great week's trading. We've had some really good moves on a lot of the majors, so hopefully you're able to take part in some of those moves, and I look forward to seeing you all next week for some of the trends that are starting to establish themselves. Have a great weekend, everyone.